Wells Fargo $250 million over some unsafe practices related to its home lending loss mitigation program. It's also limiting some future activities by the bank until it can address those problems. Okay, it's a fine, it's some limits, but Wells Fargo is still up. Maybe the fear is that it could be worse. Take-Two Interactive, TTWO, it's delaying some new Grand Theft Auto games by 4 months. Match Group, Tinder CEO Jim Lanzone is going to be the new chief of Yahoo after it's taken over by Apollo. Meanwhile, Match Group is naming Renate Nyborg as the first woman to be head of Tinder, when Tinder is basically the real growth engine of Match Group. Atlassian, just ticker team, is appointing Cloudflare's co-founder Michelle Zatlyn to its board. Bill.com filed to sell 1.79 million shares on behalf of existing holders. Maravai priced its offering at 50 a share. The stock is plunging, after it's already selling off on the past 2 days on news of its offering. C Limited SE, the last time I looked, it was up a little bit after pricing its offering, it was sinking earlier this week on those plans to do that, its big stock and debt offering. Bumble, last I saw, it was down slightly after pricing and offering. It had pulled back from around a bottoming base breakout. Okay, HCA, which sort of broke out beyond a tight area. Cowen started to outperform. Editas, one of those CRISPR firms, Oppenheimer's up into outperform. It's going to have trial data on a rare eye disease coming soon. And Needham started Sunrun at a buy and initiated Fish Solar with a hold. And with that, I'm going to move on. The market is open, so let's see about sharing and starting up and sharing my screen. If I can do that and get over Thinkorswim, take a look at the candles here. And Matt, what do you make of the market action, recently over the last few weeks, and what's your sentiment, what's your take on the market overall?
This is one of those strange markets. Sometimes, people outside of active investing can look at a market and say, hey, wow, what an easy market. But underneath the hood, it's just not the same kind of market.
It's just that easy. Look, it just, you just buy at the 50 and it goes back up.
Exactly. I think I've probably had easier time making money in like downward trending markets, but it's one of those where if you're more of a wealth manager type of market and you're holding on to positions that have been working for a long time, especially larger cap, it's a great market for you. I think for active people, it's been a little more difficult because there's not a lot of follow through, but I think that's not really new to anyone who really follows these stocks. But I'm hoping out of the summer period here, we can kind of get some heat into those names. I know the Russell 2000 has been kind of in a sideways pattern. If that can break upside, maybe we can get a little more excitement in the mid to small cap names. But I mean, I think the big threat to the market would just be how the Federal Reserve, deals with its QE and the bond purchases. So as long as you can see this uptrend in this market so steady because that's the pace at which they're adding money into the system. So as long as they don't pull that money out too quickly, I think we're okay. I think that's going to be really the key driver the next couple of months is what Jay Powell has to say about the market.
All right. Justin, any things that you'd like to add about the market action?
Well, we had Kenny Polcari on the podcast, so that dropped yesterday. And by the way, if you want to hear more from Matt Caruso, Matt's been on. You've been on twice, right?
Right,
Matt. Yeah. So he's been on the podcast twice. So definitely, check that out. But one of the things that Kenny was, pointing out that there's a whole generation of traders that don't know what like real interest rates and non-easy monetary policy looks like. We really have had very easy monetary policy since the financial crisis, and every time the banks and again, it's not just the Fed, it's all the central banks. Every time it seems like they're trying to normalize things, something knocks them back down. I mean, 2018 we were talking about, oh, it's time to normalize, and the market kind of freaked out about that, and here we are, a few years later, coronavirus, all of that. There was that normalization kept on getting pushed back. So that was something that Kenny was talking about, exactly what Matt is saying. That's something to be absolutely watching. But, for now, what seems to be happening is this whole buy on the dip. You get a little bit of action on the downside. People start looking around and saying, well, gosh, where else am I going to put my money to make money? And they come right back to the market. So it just eventually, that trend will probably end, but until it does, I feel like if you sell into the strength a little bit, and then as it pulls back, you start looking for those setups, buy some of those reversals, buy some of those early entries, you can really play this market fairly well, but it's that rotation underneath to the different groups that does make it difficult. Like, oil and the materials and the steel stocks were hot, and then they're not, and like retail is looking, very interesting now. A lot of setups in retail, and that was out of favor for a while. So it's just a little bit of whack-a-mole sometimes if you're trying to follow all of this.
I mean, I would say just a thing, I was like, I described it about a week ago, like as a loaf of bread, like a rally, and you're never going to get the heels. It's sort of like, and so when you have these little runs, they may be like here and like here, this was 5 days, but you're not necessarily going to get that first day, even, and this is like not on a real follow through day, but just, so you're not going to get the beginning and you're not going to get the end. I mean, you're probably not going to sell at the very top.
Yeah.
So you have a 5-day rally and you lose a couple of days. That's not much time to make money. I mean, like assuming that, you're not going to get a couple of those days. So this was actually a nice stretch. We actually had a couple of weeks, the difference between a 5-day uptrend and a 10-15-day uptrend. I mean, it's like, it's actually, there's a few days there's a few slices of bread that you can make sandwiches out of, as opposed to being stuck with it. But David, are there any, what sectors are you taking a look at? As I'm going to start switching over to Market Smith.
Yeah, sure. Well, I thought you were going to talk about lettuce too, since we were talking about bread and sandwiches. Ed, no, that analogy. Okay, that analogy won't come back. I think in my mind, the Nasdaq, the QQQ, still is the leading index. I've been watching the weekly action in IWM, and you can see it's still struggling, which indicates that maybe there's still some lingering concerns about how this gentle, hopefully slow removal of monetary easing will affect smaller companies. And I think what's interesting to me is QQQ, for instance. It didn't really seem like it ever got too extended. Right now, I think it's fighting to actually stay almost even for the week. So that's very encouraging. Yeah. That 10-week moving average acting very well. And I was looking at the NASDAQ on a weekly chart here too. Of course, this is not up to date, but it looks like, before to this morning's start, which is so far so good, we were looking at about a roughly 0.7% weekly drop for the NASDAQ. Looks very constructive because we had just had 2 big up weeks.
Yeah. And that's normal, and we're not extended. And so, this is normal to see it, especially for the growth stocks, some of the growth stocks to pull back, because they had some really strong gains in FFTY, and that's basically flat for the week after these monster gains, really, a couple of 5% back-to-back gains. But I want to kick off with.
But also, Ed, just to directly answer your question about sectors, I think I noticed there are people asking about snow. Snow is a good example. So is ABNB, and hopefully DoorDash too, DASH. Hopefully we'll have time to talk about them. In that it seems like there still is money aimed at risk on, with a risk on mentality. And I think that's pretty encouraging. So, we've got the new economy, the digital economy, retail, consumer spending, just like Justin was noting. Hey, we're seeing some flashes of strength there, but chips still doing okay. Not seeing a lot of failed breakouts. Still a lot of volatility though.
Yeah. Oh, it's still a lot of volatility. That's for sure. I think I want to get over to a firm. I think that's sort of like the stock of the morning, but it's off its highs a little bit. Matt, is this one of the stock that you would be interested in at all, or?
It has all the hallmarks of a potential big winner. You have, the big story and the way they're really paving, the way forward, but it's really always a matter of that risk versus reward. So sometimes people get pulled in by the story and there's so much upside, but if I can't get a handle on that risk and know where I can exit with a tight leash, I have to pass on it and wait for it. I mean, that's where the discipline comes in. You have to kind of wait for it to set up properly. Not that you can't buy a gap up. I mean, if you really have a lot of confidence and conviction in the story, but myself coming out of a really deep kind of a base here where, this thrust came in off the Amazon news and now earnings, I tend to want to see a little more consolidation before I get too excited. Because you have to think of all the people who are accumulating at the bottom of that base. When you get that fast thrust up, there's going to be a lot of incentive for people to say, oh, well, I just bought this way down at 60. I got a double here in a couple of weeks. Maybe let me take a little bit off because maybe I bought some stock at the IPO. I bought some at the lows. I can average out at a decent price. They're not happy with their position. So I'm always kind of cautious when I'm still within that overall IPO structure, but I love the way it's shaping up. I think this could be a really big winner down the road as they're really tied to some great growth trends going forward.
Totally agree with what Matt is saying, and I would just like add a quick thing, Ed. You look at the